The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to Drewry's LNG Shipping Market Outlook. Today, I'm joined with Pratiksha Negi, who's the lead analyst for LNG Shipping, and we are working out of our office in Delhi. And also joined is Shivam Sharma, who is the ESG analyst at Drewry, and he has an experience of 12 years sailing on ships and working with LNG carriers like Steam Turbine and DFD. So in today's webinar, we are going to be covering all the latest market trends, all the outlooks for the second half of 2005 for 26, and have a little bit more on insights about the emission and sustainability regulations and how it is going to influence our market as we go forward. So without further ado, let's start with the audience favorites first. So Pratiksha, most of the audience is interested in knowing about the rates. We have already seen that rates have been very low in the first half. So what is our outlook for the second half?
Thanks, Aman. Beginning with the LNG shipping rates, here we are going to discuss how they have performed in the first half and what are we expecting in the second half of this year. So since the start of this year, we have seen that the rates have continued to be on their downward trends. They were down by 66% in the first half on YOY basis. Now, this has not surprised us at all, and they are moving in tandem with what we were expecting the last year. And the key reason being the vessel surplus, as well as the low Asian demand that weighed on the rates in the first half. Now, in the second half, we are expecting a peak in the third quarter, mainly because of the summer demand, restocking, and winter targets in Europe. Along with this, we are also going to see the increased role of LNG in the power generation, which will be supported by the falling domestic production in key importing and exporting region as well. But although we are expecting an uptick in the rates in the third quarter, they will be lower compared to the previous year level. Because there are several downside risks that are going to weigh on the potential upsides that we are expecting in the coming months. These include US-China trade war, the increasing US-Europe trade, as well as China's low demand. And altogether, with this, we are going to see rates to reach their 5-year lows in 2025. But demand is going to play a pivotal role in the coming months, and we have to keep a lookout on that.
Thanks, Pratiksha. So there you have it. We do not have a lot of optimism about the rates in the second half of 2025. And probably it's going to be kind of the same scenario in 2026, maybe a little bit better. But of course, as Pratiksha said, that trade is going to play a in the first half of 2025, and what can we expect in the coming months?
Sure. So we did see a divergence in the LNG demand between the two key regions, that is Asia and Europe. Now, starting with Asia, we saw LNG imports declining by 9% in the first half. This was mainly because of the low gas demand in key regions like India and China. Especially China, which has recorded a fall of 21% in its LNG imports in the first half only. Moreover, higher LNG prices, they averaged around 12 per MMBTU in the first half compared to 9 per MMBTU in the last year of first half of the last year. So the increased LNG prices also weighed on the LNG appetite, especially in the price-sensitive countries in Asia. And with this, we saw the imports declining in the first half from this region. But going forward, of course, in the third quarter, we are going to see Asia, recovering, Asia's demand recovering, especially because of the harsh weather conditions that we are expecting in this region. Overall, the imports are going to be steady by the end of this year. Coming to the another region, that is Europe, of course, the picture was a little contrasting to Asia. Here we saw LNG imports recovering, and they were up by 25% YOY in the first half. Of course, the restocking and Europe ending its winter with only 35% of inventories. These were the main drivers that led to higher imports in the first half. Also, the fear of no Russian gas this year is also instigating the region to import more aggressively. And with this, we are expecting Europe to continue sourcing more LNG for its winter targets, as well as to secure itself from any energy security risk by end of this year. Also, this will be supported by improving supply, especially in its a prominent seller, US.
So I think it would be safe to say that US is going to be the major supplier for Europe going forward as well.
Yeah.
On that note, can we have some more commentary points on the exports as well?
Sure. So let's have a quick look on how the LNG exports are panning out for 2025. We are seeing improvement in LNG supply this year, especially with the start of key LNG terminals in North America, like Plaquemines LNG, Corpus Christi, and LNG Canada. We are also seeing new shipments from fresh shipments from Greater Tortue FLNG in Africa. And with this, we are seeing an uptick by 2 to 3% in LNG supply by end of this year. With this, we are also expecting US to lead the LNG export growth, as well as be the leader in among all the LNG suppliers, followed by Qatar and Australia. For Russia, of course, their current operations have remained stable, uninterrupted, but its Arctic LNG 2 project is still facing struggles, and we are not very optimistic for it, operating at a full capacity, at least in this year also. Going forward, of course, LNG supply is improving, and it will continue to improve. And we are expecting the peak to happen in 2027, where 80% of this growth will come from North America, and then it will be led by Middle East.
Thank you. So, of course, a good enough picture of how the trade is going to progress in 2025 and a little bit in 2026. But this is going to be based on a lot of different factors. And as we have seen in the past 5 years, there have been quite a few. I think we have had just 1 or 2 relatively normal years. So any such factors that we have taken into our research and what our audience and everyone should be looking at for the second half and for the coming years in our forecast as well?
Yes, Aman. Of course, geopolitical scenarios are becoming prominent part for LNG shipping, more than it was ever before. So starting with the first one here, of course, the US-China trade war. We have seen the two countries, having similar tensions in 2018, but that time the story was a little different. It had minimal or negligible implication for LNG shipping because the trade between the two was, limited. But over the past 5 years, we have seen, the share increasing. We have seen how robust their contractual capacity, contractual activities have remained. And with this, even though for 2025, we are seeing, there going to be a loss of about 45 billion ton miles demand. The more dire consequences we are expecting from 2026, where new contractual capacity is scheduled to commence, and if there are no negotiation or recovery in the trade between the two, this could have much more consequential for LNG shipping. And with tariff and trade war, this is also having an indirect impact on China's economy, which we are seeing, it's going towards a slowdown, especially with its LNG import demand, LNG imports, facing struggle. With this, we are projecting that China's LNG imports are going to register a dip of about 7 to 8% in 2025. Not only tariffs, but its internal problems are also weighing on its gas demand. It is also, the higher LNG prices, which is, curbing the buyers from buying expensive LNG this year, as well as growing domestic production and increased role of Russian pipe gas. So including all these factors, we are projecting that the country is going to register a fall of 7% by end of this year. The next scenario, of course, let's move to another hot zone, that is the Middle East, where we saw Israel-Iran war happening in the June, and that had some effect on the rates, where we saw rates, surging or having a sudden uptick, and as the tensions eased, they started following the same suit. This happened because this region holds about 21% of the global LNG supply, primarily coming from Qatar and UAE, with key buyers such as India, China, South Korea from Asia, and Belgium, Italy, and Poland being from Europe, being the key buyers from this region. So this region remains very prominent for LNG shipping, and any supply disruption or any potential closure of the Strait of Hormuz will threaten the global LNG shipping market. And even though right now the tensions have eased, we are keeping a close eye on any such development, and if it happens in the future, of course, it will again have severe consequences for LNG shipping in the long run. Last but not the least, of course, the war in Europe hasn't gone cold yet. It is still going on, and it is, giving LNG shipping some new dynamics, especially with Russia's recent directive to shun Russian gas and LNG by 2027. We have already seen the LNG trade dynamics, changing in 2020, post to 2022, where US became the prominent source for Europe's LNG needs. We are not expecting any major changes in trade dynamics. The only silver lining that we are hoping, if it ever happens, is that if the war ends by 2026 or 27, and sanctions gets removed from Russia, and Europe can then comfortably start sourcing LNG from the region, and then that will give US LNG its way to Asia, which would bring some benefit for LNG shipping. While on the other side, if this doesn't happen, then of course the trade will have more of shorter voyages with higher concentration of trade between US and Europe, and that could be again bring a negative impact for LNG shipping in the long run.
Thanks, Pratiksha. Obviously, these are going to have a lot of influence on how the trade and the shipping market is going to develop in the coming time. At the same time, these factors will also affect the financing for the LNG projects. So, and we have seen that previously we expected 2024 will be a big FID year, but then we saw Biden's pause and the effects on it. But now Trump is here, and of course that reversal has happened. So any comments on how the FID activity is going to be like in 2025 and going forward?
So of course, with the coming of Trump in February 2025, the sentiments started being positive again in the market, especially after the Biden's pause, like you mentioned, in 2023. We are expecting the rebound to happen in 2025, and it has already started with 3 projects already securing their FID in the first half, which includes Louisiana LNG, Corpus Christi Phase 3, and Argentina's Southern Energy FLNG. With this, we are also expecting 2 more projects from the US to secure their FID by end of this year, CP2 Phase 1 and Commonwealth LNG. The critical reason being the acceleration in regulatory easing, which is providing the FERC approval and also boosting their prospect for securing FID in the near term. But we are also expecting that the next 3 years are going to be the critical one for project development, and the haste for FIDs are going to or is going to fade beyond 2029, as about 170 MTPA of under construction capacity and over 200 MTPA of plant capacity, which is waiting for its FID in next 3 years, is going to form an oversupply concern. And that is what will start affecting the ship owner, the project developers' interest in LNG market. And with this, we are also expecting that the next wave is going to span from 25 to 2030. I've already mentioned that North America is going to lead this growth, followed by Middle East and Africa.
Thanks, Pratiksha. So yeah, a lot of capacity is going to be incoming, 170 MTPA of under construction capacity, and I think 200 plus MTPA of capacity in various planning stages. There are also a lot of speculative projects, but these are going to face a lot of competition from the already under construction and planned projects, as well as the scrutiny that the LNG is facing because of its fossil nature. So in terms of the cost, in terms of carbon capture, in terms of maybe going towards bio LNG, there is going to be a lot more factors that new speculative projects would have to consider. So within our story, moving from investments in projects, let's move to investments in vessels. And the major question that is going around the market is, will there be enough LNG carriers by 2030? We've already seen how many projects are coming. There have been some delays, but can you answer or maybe try to answer this question?
Yeah, that's an intriguing one, and let's discuss something about how the LNG fleet development is looking for the next 5 years. So according to our projection, the LNG fleet is coming out to be a strong one in the next 5 years, and it is basically because of the high delivery schedule till 2027, gradual scrapping, and the new demand that we are expecting from 2028 because of the massive pre-FID capacity, which is going to, which is weighing for its FID in the next 2 years. Altogether, of course, this is forming our very optimistic outlook for LNG fleet development. But just to, get into deeper, let's break the next 5 years into 3 phases. Where in phase 1, let's see, from 2025 to 2026, there's going to be ample supply in the market, propelled by the high deliveries, moderate ordering, and gradual demolition. And this is going to, keep the vessel at surplus. But towards 2027 and 2028, there's going to be a rebalancing setting in the market in terms of fleet development, where the deliveries will moderate, new orders will spur, and there's going to be higher scrapping activity in the market, along with conversions. And this is going to reinstate some, balance in that oversupply situation that we are experiencing right now. Beyond 2028, and for this we have to read our forecaster as well, we are seeing a transition from a surplus market to the deficit market, and we are going to see the fleet. We will need more LNGCs because, of course, like I said, 200 MTPA of plant capacity is still with uncontracted new orders, as well as replacement tonnage will become a concern for a lot of ship owners, and this will boost the demand for new LNG carriers. So to answer to your question, Aman, of course, we will need more LNGCs in the future.
So that means that the ordering trend right now, which is relatively low for LNG carriers, and understandably so, because we had so much of ordering done in 2023-24, that will resume in the coming years. But of course, even now, it is happening, but not for the LNG carriers. It is happening for LNG bunkering vessels, for the small-scale LNG carriers as well. And even for the LNGCs, the most recent development that I came to know is that there has been an LNG carrier order in the US.
Yes.
This has been the first order, I think, in 50, 60 years. I think the last one I remember is 1970s. So yeah, this could have some, good changes about the market as well, because LNG shipbuilding, it was very limited. So more capacity means there can be much more orders as well. At the same time, of course, the scrapping outlook is, it's heating up right there. Steam turbine carriers and their struggles to find employment, that is seeing a rise in the scrapping in the second-hand deals as well. I think this year alone, so far we have seen seven vessels have been scrapped. That is the same number that we saw in the total year 2024. And our projection is actually double that. So we are expecting around 15 to 16 vessels to be scrapped. Yeah. So, and that will continue to happen in the coming years as well. So we do expect a considerable amount of vessels to be scrapped or to be removed from the fleet for conversion opportunities as well, because demand for FSRUs, FLNGs, that is also very, very hot. So while we are on this page right now, there are going to be a lot of emission and sustainability regulations that are going to be impacting how the fleet develops. So Shivam, if I can just ask you to share your insights about what is happening on the emission front and how it is going to impact LNG as a maritime fuel, and maybe something about the technology as well.
Okay, thank you, Aman. So next slide. Yeah, the burning news in the market right now is the IMO net zero framework under MEPC 83, and it will have a burning tail behind it till 2028 for certain, because numerous things under this framework have not been cleared yet. And in this landmark decision, you know, the net zero framework under MARPOL NS6 gave and introduced certain midterm measures to reduce the GHG emissions from the vessel. Okay, the regulation includes even the tightening cap for the GHG intensity and has a mechanism where non-compliant vessels must purchase the remedial units for the penalty. So if this regulation gets approved in the extraordinary session in the upcoming MEPC meeting, it will be the first to combine GHG emission limits as well as the GHG pricing mechanism under the maritime industry for the first time. So this is a very, very big step happened in the maritime world just in April this year. And it has two measures under which this framework has been decided. The first is the technical measure and another one is the economic measure. Next slide. So under technical measure, the IMO is enforcing GHG fuel intensity limits from 2028 for the vessels of 5,000 GT and above using a two-tier mechanism system. The first is the base target and the stricter one is the direct compliance target. The direct compliance target is a total compliance mechanism, while the base target, it reduces the penalty. There is also a system installed inside it where the vessels with their yearly average GFI below 19 grams CO2 equivalent per megajoule till 2035 will be incentivized by the IMO, which will be further stepped down to 14 grams CO2 equivalent per megajoule after 2035. This is a very big step because in the future, the alternate fuels, the future technology will be getting incentivized by the IMO from the IMO net zero funds. And what we see is that the net zero framework is stricter than the fuel maritime regulation in terms of GHG intensity targets. Next slide. And under the economic measure, it shows how the penalty system is working. So the ships must calculate their compliance balance, and the non-compliant vessels must buy remedial units from the IMO at the price of $100 to $380 per ton of CO2 equivalent, while the over-compliant vessels can bank or sell surplus units for up to $380 per unit and can be used to offset their tier 2 deficits. Next slide. This is an interesting one. Here we have shown what all fuel can be considered for the long-term vision. So the chart on your left side shows that additional cost dollar per ton for various fuels. We have excluded the use of the pilot fuel burning inside the engines for this calculation. And from the top, you can see that the HFO is getting straight away penalized from 2028 when the IMO and ZF will enroll. LNG in the yellow line can be seen as a transition fuel working well enough till 2029, 2030. Later on stages, you can see that the penalty for the LNG, gray LNG, is rising up slowly, while the future fuels are creating surplus in the future. But the problem here comes is that the future fuel supply demand gap. There is not enough supply that all the ship owners can obtain for their vessels, which is creating a big uncertainty for moving towards the fuel. So LNG is a very, very nice option looking right now in the market for being as a transition fuel. However, we have to work on the methane slip reduction technologies as well as to reduce the GHG fuel intensity values from well to wake ratios and all, so that the penalty of the gray LNG reduces. Next slide, please. So here we devise some strategies. We suggest certain strategy for the ship owners. So looking at the short term, we have to reduce the penalty for the ships by adopting the energy efficiency measures such as PIDs, ESDs, which are energy saving devices, propulsion improving devices, things like that. We have to start using the B30 biofuel blends. Before it was B24, now B30 is getting progressively increasing in the market. For LNG fuel, specifically, we have to start thinking about blending gray LNG with the bio LNG. Certain examples right now, NYK has started doing on it, and we have to start buy value for the gray LNG, which will eventually reduce the penalty for the vessel. And we have to start thinking about ordering the dual fuel vessels. So that's for the short term. For the mid to long term, what we think is that we have to use the bio or the blue versions of the fuels, eventually following by the e-fuels. And when we're using such fuels, we have to think about establishing long-term contracts with the fuel providers for low to zero GHG fuels. Okay, Aman, you can share now.
Thank you, Shivam, for your valuable insights. And of course, to our audience, if you have any such doubts or queries related to the ESG or any of the regulations that we have an in-house ESG team. Please feel free to contact us and get in touch with them. So let me just continue with our webinar and just give you a very quick summary of what we have discussed so far. So the LNG carrier rates are going to register the 5-year lows in 2025. We are going to see some improvement in the third quarter. That is going to be based on increase in summer demand from regions like Asia, South America, and we're also having some additional cargo requirements from Middle East and Egypt as well. But the weak fundamentals are going to continue, and that is going to keep the rate subdued in 2025 and over 2026 as well. The supply outlook looks positive. There is a lot of liquefaction capacity that is coming, but there are still downside risks. 170 MTPA is under construction, and most of the capacity is coming in North America and mainly US. So there can be more problems coming in the future. There can be LNG traffic jams that I read very recently that can happen there. So that can be something that we should be looking at. And even with the hurricanes and the fog season, that can create some new uncertainties, definitely. Coming to the fleet, it is expanding at a very rapid pace, almost double that what we have seen in the last 5 years. It is based on the high order book that has been created, and we are seeing record high deliveries. Right now, we are on path of becoming a record high delivery year 2025. But again, we are going to say the same in 2026 and then again in 2027. So this is going to go on, and the fleet is going to rise rapidly. Orders for LNGCs are limited in 2025 and understandably so. But the orders for LNG bunkering vessels, small-scale LNG carriers, they are rising very, very fast. And we believe that these will contribute to become a demand center when the new LNG capacities are operational in the market. At the same time, the demand for FSRUs, FLNGs, and FSUs, it is red hot, and it will continue to do so in the next 3 or 4 years. Meanwhile, on the emission front, at the MEPC 83 under the IMO Net Zero framework, LNG is still the best transitional fuel, and the owners of vessels with engines, they will not have to worry about the compliance cost until 2029, 2030. But after that, they have to start thinking about using the blue or biofuels of this version. You can use emission reduction, methane slip reduction technologies. You can have bio blending technologies. You can also go for lower green fuel intensity LNG, which some of the projects can come up with. So these will be the measures that will be there. So that's all we have prepared, and I see that we do have a few minutes, so I think we can take the audience questions. Let me just pull it up. Okay. Apparently, we have a lot of questions right now, so I will just have to see a few. Shivam, I think this one would be for you. So, can you give us an update on the developments in methane slip reduction technology? Yeah, that was the last one that I was mentioning. And what is your opinion on the feasibility of technology?
Okay, so sharing some background about it, LNG has a GWP potential 28 times more worse than the CO2. So this issue cannot be taken lightly, specifically with the coming and regulations, and these regulations will start getting stricter day by day. For vessels specifically, they will be facing CII, IMO, NZF, and there are plenty other FEM, EU ETS, plenty regulations will be topping up day by day. So what happens is, like, if we are seeing an LNG as a transition fuel, and if we want to continue LNG for a smoother transition, in that case we have to think about the complete value chain from WTW perspective, well to wake. So initial phase is the GFI reduction using the methane in a way where the LNG is getting produced. Secondly comes tank to wake ratio, where the methane reduction technology, what you're talking about, becomes very prominent. These technologies can be post or pre-exhaust depending upon various scenarios. So the big engineering companies are using ITR technologies, some MSS technologies, catalytic oxidation is also coming up. So the big engine manufacturers are working on it, and we are seeing some good results also. They are claiming up to 70% reduction in the methane slip. Although we have to see how it pans out in the future when it will be used on a vessel and it will be measured over there, and those reports going to the IMO. First is IMO and how much penalty. So certainly the step is to reduce is to use the PIDs, ESDs, etc., which I shared, and the second is to work on these technologies for keeping the LNG one of the best in the market to be as a transitional fuel for the future.
Thank you, Shivam.
Thank you.
Let's move on, and I think Pratiksha, you would be able to take this one. So, what is the outlook for LNG bunkering vessels, and are we expecting any surge in orders in the coming years? And there's a second part to it. Any comments on which are the major hubs and what is going to be expected in the future?
Yeah, thank you for the question. So of course, we are having an optimistic outlook for LNG BVs. The rush has already started. We are seeing, LNG BVs having more command over the order book this year than LNGCs itself. The trend is going to, be like that in the next 5 years. We are also seeing there is going to be a growing gap between the LNG bunkering demand and supply, especially with the alternative fuel order book. If we see about 1,000 of LNG fuel vessels are going to be serviceable by 2027, and that is going to create or spur the demand for LNG BVs as well as for small scale LNGCs. So yeah, overall our outlook is positive, and we are also seeing that as there's going to be a lot of supply by 2027, as the prices will ease, this will also support the upcoming demand for LNG bunkering. Coming to the second part, right now the major hubs are in Singapore and Rotterdam. The emerging markets are in China as well as in the North American region. So these will be the primary hubs, as well as we are going to see some new hubs coming up in Mediterranean and Scandinavian regions in Europe.
Thank you, Pratiksha. We are a little over time, but I'm seeing that some of these questions are in multiples and people are looking at the same thing. So just taking some of them. Any comments on your LNG price outlook for 2026 and 27?
Okay, LNG price outlook. Okay, we are seeing that what we are expecting by end of 2025. Of course, they are going to be higher than the last year level. What we are expecting them to average around 13 to 14 per MMBTU by end of this year. compared to 10 last year. And we know that even though the supply is improving, the fundamentals, or I would say, they remain very fragile. We have seen how the prices are reacting to any sporadic or short-lived supply disruptions as well. So the same sentiments will go on in the second half also. And for 2025, of course, we are expecting the prices to be higher than the last year level.
Thanks, Pratiksha. Another one, and I'm really sorry, this would be only the last question that we take in the webinar right now. But rest assured, all the presentation material, the recording of this webinar, it is going to be available on Drewry's LinkedIn channel. You can also, our subscribers or for on demand, they can also view it from the on-demand portal. So the last question, beyond LNG carriers, and I think I can take this one, LNG carriers and bunkering vessels, will LNG adoption become more common across gravel, container, and tanker vessels? Thank you for the question. And yes, it has become a prevalent choice. In the middle there was competition to LNG from methanol and other alternative fuel. But even now, in 2024 and 2025, LNG has come out as the most optimum choice or the most preferred choice. In terms of the number of vessels, the alternative fuel fleet, as I was looking for LNG engines, the biggest ones are going to be container ships and car carriers. So these two sectors have a very high order book where the vessels will be LNG dual fueled. But we do believe that there are going to be other sectors as well, which will jump in later on. But LNG is going to have a very good future in this sense. So yeah, there you go. And we are already 5 minutes over. So I think this is the best time to say thank you for our audience and being with us and getting some insights. Our email IDs and our contact is on this on your screen. So please feel free to drop in any suggestions and feedbacks or queries that you would like. Thank you so much, and see you again. Maybe a quarter or so. Yeah. Sure. Thank you.
Thank you.